From Yahoo Finance, this is Electionomics. I'm Rick Newman.
And I'm Alexis Christoforous. Thanks so much for joining us. As we enter the home stretch of the election season, we thought it was appropriate to take a look at President Trump's record on trade. One of his signature goals of his presidency was fixing U.S. trade relationships with places like China and Mexico, and also reducing the U.S. trade deficit. Joining us to talk about this on Electionomics is Chris Rogers, supply chain analyst at Panjiva, a unit of S&P Global. Chris, Rick and I are so pleased to have you here today. I want to begin with President Trump's sort of war on the trade deficit. The latest figures show the U.S. trade gap on track to exceed $600 billion this year. That would actually be the highest since just before the financial crisis of 2008. Has President Trump lost his battle against the trade deficit, do you think?
Well, thanks, guys, for having me along today. Has he lost the battle with the trade deficit? Well, the numbers say yes, absolutely. I think it's worth just stepping back and saying, why does he see the trade deficit as being an issue? And the answer is it comes from a zero-sum view of international trade. So, if you have a trade deficit, it's like you're giving somebody money and getting nothing back. And that's why it's been such a focus. Now, the total trade deficits kept going up, and that's because Americans are still buying things, right? Most economists will tell you trade deficits are more about the relative balance of saving and spending. And you had a huge, great stimulus package back at the start of the administration, and you've had a decent rebound after the coronavirus lockdown. So it's perhaps not a surprise that the trade deficits kept going up. The issue is which parts of the trade deficit have gone up and which ones have gone down. And in that regard, he's been successful in some places and less successful in others.
Hey, Chris, you're preaching to the choir here about trade deficits. I mean, we've reported so many times, no one should get wrapped up about the number. We're not getting ripped off. We're not just giving dollars to China. We're getting stuff. We give them paper and we get stuff in return. Exports are important. I mean, you do want strong exports because those are your domestic producers of both goods and services selling stuff overseas. So how has that done during the last 4 years?
Yeah, I mean, overall, exports haven't really gone anywhere. Overall, kind of point to point, they're pretty much where they were. Now, it's difficult right now to say, are we looking at steady state or not? Because again, we're only just coming out of the downturn associated with coronavirus. Before we came into this, there was some decent growth, but by no means the kind of lift off that you'd hope from a presidency that had promised onshoring of jobs and a radical change in the way the supply chains work. And there's a lot of different components to that, but in very simple terms, you can say, look, number one, exports to China have actually kind of went down before they've come back up as a result of this trade deal. Number two, the fact that he's gone to war with other countries and regions in trade have meant that they've put tariffs on, so that's cut exports. And then the other big part, of course, is that commodity prices have come down. And the big part of the US export base is things like oil and soybeans and so on. And right now, they're a hell of a lot cheaper than they were 4 years ago. And as a consequence of which, you're working just as hard, but maybe not bringing as many dollars in. So the exports just haven't gone as far maybe as people would have hoped.
So we're now, 6 or 7 or 8 months into the coronavirus pandemic. Now, Trump signed this so-called phase one trade deal with China. He finalized that in January, and then basically the coronavirus exploded everywhere. So to give Trump the benefit of the doubt, what did the trend lines look like before coronavirus really cut back on trade everywhere?
Yeah, sure. So in terms of the trade with China, it had pretty much just been a straight line downwards until the phase one trade deal had been signed. Now we're beginning to see, so we look at the data on a month by month basis, and the data for August was beginning to pick up. So China effectively committed to increase its purchases this year versus 2017 by around $200 billion through the year overall. Now, as of August, they were nearly $50 billion behind schedule. And as you mentioned, a lot of that's down to coronavirus. But when we pull out, there's kind of three big components to look at. One is agriculture. which is basically soybeans and pork and so on, where China's made some big purchase commitments, and it seems to be delivering on those. In terms of pork, obviously they've had the whole issue with swine flu over there, so there's been a natural draw to bring products in. Corn's been pretty strong as well. So agriculture, not worried about. You've got state-owned firms buying a pretty clear commodity. On the energy side, they've been a little bit behind schedule. That's partly because of the oil price, but also partly because just people everywhere are just driving less than they were. The big one where there's a gap is manufactured products. So that's meant to be everything from cars to jet planes to pharmaceuticals to the whole gamut of manufactured products, and there China's a long way behind schedule, and that's partly because it's not just state-owned enterprises buying those things, and also the aerospace industry is not going anywhere. So there's been no big orders of new jet planes to help bolster the numbers. So coronavirus adjusted, it looks like China's kind of well behind schedule. We had some data this morning from the Chinese government that showed another pickup in imports from the United States. So they're keeping on track, but at the end of the day, we're still not back to where we were in 2017. Never mind the kind of sunny uplands of a $200 billion increase versus 2017.
Can you tell if China, if they're trying to keep their word? I mean, there was this whole question when Trump signed the trade deal, would the Chinese actually do what they said they would do? I mean, can you tell whether China seems to be sincere about meeting those purchase levels and they just got derailed by coronavirus, or they were not sincere and they're using coronavirus as an excuse?
Tough to see what the Chinese government's intent and actions are in the way you've described it. The numbers would suggest that the purchases just haven't been happening. And I think part of it, we also need to bear in mind is that the phase one trade deal was always formulated with the phrase subject to market conditions. And so market conditions have changed. Now, the stuff that's bought by state-owned enterprises, particularly as I mentioned on agriculture and energy, has been going up. Medical supplies have also been going up. It's a big surge in supplies going from the US to China. And that's not just going to be COVID-related stuff. That's kind of the higher end healthcare treatments. So things like cancer treatments and so on as well. So there's a sign of success there. So, I think it's worth bearing in mind as well, the intent when we were talking about the phase one trade deal back in January was that there'd also be a phase two trade deal that would cover things like digital products, intellectual property, and a whole gamut of other areas. And, nothing's been happening there. I think as a final point, both sides said that they would come back in July and review the deal and say whether they were happy with how it was proceeding. They actually took a look at it 2 weeks later than they should have done, with all the numbers I outlined, and still said, we're fine, let's just carry on. So it looks like both sides are kind of happy or not unhappy with where they're up to.
Chris, another thing the president has promised often is bringing manufacturing jobs back to this country. And we saw that he renegotiated the Nafta deal. We now have USMCA. He's got sort of mini deals with lots of different places. South Korea, mini deal with the EU as he holds on to this sort of unilateral approach. Has he succeeded? Can he point to some successful data points when it comes to bringing manufacturing jobs back to the US? Do we have more now than we did before his presidency?
Yeah, so again, this is going to be every statistician's answer to everything for quite a long time. We don't really know because of coronavirus. So when you look at the jobs figures, those are well down, still across the board in most industries. So, it's very difficult to see within that how many jobs have come back. I think it's been notable how few companies have come up and said something along the lines of, as a result of the president's policies, we're bringing jobs back to America. Because why wouldn't you tout that? Why wouldn't you run the, we're great for America thing up the flagpole? You've had some examples. Samsung and LG Electronics have opened factories, but they've been very clear that that's something they were planning to do for many years. It wasn't due to tariffs. The big Foxconn plant that was being built in Wisconsin has just not received its subsidy payments because it wasn't bringing as many jobs as it should have done. And in fact, when you look at how supply chains have shifted, both in terms of what we see in our data and also what companies are saying, when it comes to kind of moving out of China, what they've done is just move somewhere else. So Vietnam's been a big beneficiary to the extent that actually President Trump's now launching a trade investigation of Vietnam. Malaysia has been a winner as well. And to a certain extent, Mexico has done well as well. Now, that's not to say that there haven't been successes in terms of renegotiating trade deals, which was a prima facie objective. That's something that the president's been very clear about from the get-go. So as you say, the Nafta deal was renegotiated. I still don't know if we're meant to call it USMCA or USMCA or something else. I know the Canadians call it CUSMA and the Mexicans call it TMEX. So everyone took what they wanted from that deal, but that deal won't actually have an impact on how supply chains are operating for quite some time. A lot of companies that have talked about rearranging their supply chains, particularly in the auto sector, are talking about kind of years to adapt and to change rather than months. So, arguably it would really only be the middle or an end of a second Trump presidency before you'd be able to say definitively, have companies actually brought manufacturing jobs back to the United States because of President Trump's policies. Chris, the general. Sorry, please go ahead.
Yeah, I'm just looking at a couple of stats from one of your recent reports. So you highlighted last 12 months. So these numbers are the last 12 months compared with 2016. Yep. Washing machine imports down 43%. Solar panel imports down about 15%. That is what you want to accomplish. I mean, well, if you're somebody like Trump, that is actually what you want to accomplish with tariffs, right? You want to make imports more expensive to incentivize domestic manufacturing. So the catch there, if you're a consumer, if that works, that means the price goes up here when you're buying the product here. Do you actually know if that has happened, that in instances like that, washing machines, for example, while imports have declined, the prices have actually gone up here in the United States?
Yeah, so I mean, if you pick off these kind of what I call the special trade actions, so not kind of walloping after China, but these individual elements. On washing machines, the imports have come down, but as I mentioned, that's partly because Samsung and LG have set up factories in the US. And in fact, that's the result of a kind of game of whack-a-mole that's been going on for many years, where they started off in South Korea and then they moved to China and then they moved to Vietnam and they finally moved to the US. So those washing machines have been moved to the US. The pricing is difficult to get at because the mix of different types of machines have changed over time. But certainly in the immediate aftermath of when those tariffs were announced, you did see a lot of the retailers say, well, we're going to have to put prices up. I think there's also been a degree of burden sharing as well. So US import price inflation, hasn't gone up as much as you might have expected. In fact, the imports from China, import price inflation actually has come down over the past couple of years. So there's maybe a sign that Chinese exporters are sharing some of the burden there. When you look at solar panels, the shipments came down, but that's partly because there was a rush to get solar panels in the door in 2016 because President Trump was never really a friend of renewable energy. So I think there's a bit of a rush there. It has been notable that there's been a real surge in imports of solar panels to the extent that actually the president made an announcement in the past couple of days that he was going to tighten up the rules on imports of solar panels. The big one, though, has been steel and aluminum. And in that regard, there has been a reduction in imports of steel and aluminum. But if you look at the pricing of some of those products, they've gone up. And, frankly put, the US metals industry still isn't in a great way. Interestingly, I was talking to a former colleague who's a specialist in the metals industry. And they said, look, in the good old days when you used tariffs to change behavior, the tariffs were 100% or 200%, and that made a real difference. The steel tariffs that Trump put in place were 25%, and the aluminum tariffs were 10%. Many companies have just said, well, it's the cost of doing business. We'll put a little bit on our customers, a little bit on our suppliers, and a little bit off our profits, and we'll just move on.
Chris, you said China actually has sped up its purchases of U.S. agricultural goods. Does that suggest that American farmers are getting back to being in good shape?
So yes and no. So on the yes side, yeah, their exports are going up. And one of the other data points we track is US imports of agricultural machinery, and those have been going up. So you've got to presume that, you know, either the farmers are buying those machines or the suppliers of those machines think they will be. So that's good on the one hand. On the other hand, you know, I'm not hearing great reports of how the harvest season's going or how planting's been going. We're not kind of experts on you know, in US agriculture, but you know, you might be selling it to China, but are you also going to be selling the same amount to other countries as well? There's, you know, only a certain amount of soybean demand in the world. So if the US is, if China's prioritizing the US, then Brazilian farmers, for example, or Argentina's farmers may be selling for less and taking market share elsewhere in the world. So yeah, we haven't magically created more demand for soybeans than was there before.
Did we lose it? We lost Alexis, it looks like. So Chris, let me ask you to go just back to, this happens, by the way, you know, we're all doing this weird format. Alexis will magically rematerialize, I'm sure, any second. Just go back to what you mentioned about Vietnam, this whack-a-mole problem. This has been one of the main criticisms of the Trump approach, is that if you go after one country with tariffs, all you're doing is encouraging producers to go to another low-cost country and then another low-cost country after that. You also mentioned Malaysia. Is there a way to like do some kind of blanket tariff to prevent that from happening? Or is that just going to be an unintended consequence of tariffs almost no matter what?
Yeah, so we've seen with I use that whack-a-mole phrase because that was particularly the case in washing machines, where there was a tariff case here, a tariff case there, and eventually they went for what's called a safeguarding tariff, so Section 201 of the Trade Act, and that put tariffs everywhere. So it eventually got there, but it involved quotas and really high tariff rates. Now, the only way the president can kind of guarantee that we don't, you know, that we get all that manufacturing coming back to the US, as you say, is to have across the board really significant tariffs. And, you know, that's a real job of work. That would involve reviewing the most favored nation status tariffs that the United States has. It would also involve significantly higher tariffs than we've been talking about so far. You know, most companies would rather have a short supply chain, be close to their customers. It makes you more agile. It makes you more responsive. It allows you to play the, you know, we're American, buy American, or, you know, insert country here card. So they would rather go, you know, in country, but, you know, they've got to maximize profits, and to overcome that kind of lower cost base that you get from those other countries, you know, you really have to boost tariffs quite significantly. So this Vietnamese investigation, which is using the same mechanism that they used to go after China, is focusing specifically on currency. Because remember, you know, the US is still a country where the rule of law matters, and that's the only element where they've been able to, if you like, go after Vietnam generically. That and the use of timber products, bizarrely. So, you know, is that going to be enough to suddenly lead companies to go, no, we're leaving Vietnam and we're coming back to the US? No, they'll leave Vietnam and they might go to Malaysia. Okay, we're going to have a review of Malaysian trade or Thai trade. Or even, actually, if you want to move closer to the US but still have lower labor costs, you go to Mexico. So, you know, we've just had,
we're back where we started, it seems.
Yeah,
you know,
yeah,
with the USMCA or whatever it's called.
yeah, exactly. So it's difficult. There's no great way to use tariffs to change that behavior. What you have to do is the hard work. It's, you know, re-educating your workforce. It's thinking about what you want your industrial makeup to look like, and, you know, put in place policies that are going to meet that long-term aim. That's not, frankly put, the American way. That's not, you know, how market-based economies work. To change that behavior, what you have to do is the hard work. It's, you know, re-educating your workforce. It's thinking about what you want your industrial makeup to look like, and, you know, put in place policies that are going to meet that long-term aim. That's not, frankly put, the American way. That's not, you know, how market-based economies work.
Has there been an example of any such policy? I mean, you know, United States is famous for never having any kind of industrial policy. I mean, we are a free market economy, and so we're never going to try to tell businesses what to do. But of course, there are all kinds of incentives and disincentives in the tax code. Can you think of an example in recent history of what you just described?
Well,
there might not be one.
Well, so globally, it's China. And, what used to be known as Make in China 2025, and that kind of got brushed aside because it was a bit of a red rag to the US bull, as it were, as a big part of how that Section 301 review, so the big review of China that led to the trade war, that's what caused that, was the government saying very clearly, these are the industries we want to go after. These are the employment levels we're going to need. Frankly put, these are the subsidies we're going to put in place. So, the US tax code could be used in that regard. And both, President Trump and Vice President Biden in their platform statements have said they'll use the the tax code. I'm obsessed with tariffs. I spend my whole day looking at them. Use the tax code to provide incentives for those different industries. But, that's a big job of work. And as I say, it's not just about the tax code. It's got to be about education. It's also, frankly put, got to be about immigration as well, getting the right people from the right places to do those jobs.
So I do want to ask you about Biden before we have to wrap up, but just last question about Trump briefly.
Sure.
Do you credit Trump for anything he's done on trade? I mean, I can say, he has intensified the focus on China, let's say, and what many people agree are trade abuses on China, even if he may have gone about, his solutions might not be the right ones. But what would you say Trump has done right on trade?
Yeah, sure. So I think the first thing is that, NAFTA did need updating. It was written in the mid-90s when the internet wasn't a thing. So there's a lot that's been added to that. The labor parts of it have been particularly important because that trade deal will be used as a template and as a, how you're supposed to do it, not just for US relations with other countries, but for other parts of the world when they're setting up trade deals. So I think that was, really important. I think, as you mentioned with China, right objective, wrong route. I'd say something similar for the WTO as well. The World Trade Organization was dysfunctional, and the way that appeals to the WTO work just wasn't functional. But again, you don't sort those things out by breaking them. You effectively now have a free for all. So those areas, on China, on NAFTA, on WTO, right objectives, not bad outcomes, but really fundamentally the wrong route.
So, Chris, we've only got a couple minutes left here. What have you been able to tell about Joe Biden's? And we have Alexis Christoforous back. She's going to join us for the finale here. Welcome back, Alexis. What have you been able to tell about Joe Biden's plan for trade? What he might do differently? I think there's a lot he has not spelled out. He has been reluctant, it seems to me, to say whether he would keep the Trump tariffs in place on China, for example, or do something different. But what do you detect as you look at Biden's plan on trade?
Yeah, sure. So the first thing is Biden doesn't have a plan on trade. He has a plan for jobs and a plan for geopolitics, and trade drops out of the back of that. He's been very clear that he wants to sort out the domestic economy before worrying about overseas deals. He has talked specifically on trade, though, about following a multilateral approach. So alliance building around China, sorting out the WTO, looking to put in place better relations with allies that maybe relationships are not as good. And for us, the big differentiator between the two will be relations towards the European Union. And, for those of you who've been looking at this for a while, the TTIP deal that the Obama administration had negotiated with Europe could come back at some stage, but that's all long-term stuff. We have had some indication from one of Biden's advisors, Blinken, I think, said, we will use tariffs as part of a broader plan. So I don't think those tariffs are going to go away anytime soon. You certainly don't want your first act in office to be, we're going to get rid of the China tariffs and make friendly with China. A lot of it, finally, I would say, will be what Biden can do will be a function of whether he's got the Senate and the House with him as well. If he does, rock and roll. If not, that's going to be a challenge, and we'll see a lot more stuff being done via executive order. I think the final thing I'd say is that the president's ability to negotiate trade deals under what's called TPA comes up for negotiation again in the middle of next year, and that's going to be something that Biden's going to have to focus on. If he doesn't, he won't get anything done.
All right, we're going to leave it there. Thanks for picking up the mantle, guys. Technical difficulties abound, and I was a victim, but I'm back. And thanks so much for your time, Chris Rogers of Panjiva, which is a unit of S&P Global. And as always, you can follow me at Alexis TV News.
And me at Rick J. Newman.
And me, Chris G.H. Rogers.
Say it one more time.
Sorry, and me, Chris G.H. Rogers.
All right, sounds good. Everybody, thank you so much for being with us. We look forward to seeing you next time.
Bye.
Bye.